In this video, we're going to look at an already profitable day trading strategy, but then we're going to modify the exit and include targets depending on the risk. So we're going to use different reward to risk ratio targets. So we're going to look at 1-to-1 target, 2-to-1 target, 4-to-1 target, and we're also going to compare them up against the original exit, which was just a time-based exit, to see how things work. I'm going to carry out this test on an already existing strategy, a strategy that some of you might have already seen because I've done a video documenting exactly how it works. It's a strategy that uses daily charts for dollar yen, and I'll link that strategy so that you can go and watch it if you haven't, or refresh yourself if you've forgotten exactly how it works. But for now, what we do is we'll look at the whiteboard and I'll go over the simple entries, where to put the stop loss, and then we'll talk about the reward to risk ratios. The idea of testing these different reward to risk ratios is to see how it works with modifying an existing strategy and to see whether we can make more profit than the original exit, and just in general test how 1-to-1, 2-to-1, 3-to-1 it does actually work. So for this strategy, we're looking at dollar yen daily charts. We're looking for a 3-bar setup. We're looking for this middle bar to form what I call a kangaroo tail. Now, all that is a lower low than the bars either side of it. Once we see this third black bar here drawn, then that's our setup to place a long order. We place a long order at a stop order at the high of that third bar. Okay, so if prices break, and I've marked here with the red dashed line, that's our entry. So this blue bar we would have entered when the price broke above the high of that third bar, and we would have got long into the trade. Now I'm actually using the improved version of this strategy. In the original video I showed you the basic version and then an improved version, and I actually left a link to a PDF document which shows you the exact rules including the improvement. So for this test I'm actually using the improved version. So I mentioned the red dashed line, this is our entry point. Okay, now we always place our stop loss at the low of this third bar. So this red dashed line here shows where our stop loss is. So between our entry and our stop loss, this is our risk. That's our risk there. So let's, for argument's sake, imagine that's 50 pips. So the range of this bar was 50 pips. Now, our reward is going to be between where our entry was and where our exit was. So if we were looking for a 1-to-1 reward to risk ratio, then we know our risk was 50, and we're going to set a profit target at 50 points away from our entry. Now, I've programmed a neat little bit of code into this strategy, and what it does, whenever it gets the setup, it measures this risk and it automatically will place a target depending on the multiple that I say. I could input whether I want it for 0.5-to-1, 1-to-1, 2-to-1. It knows how much that is, and then it just calculates the 1-to-1, etc., and places an automatic profit target. So let's go over to the computer and have a look at the results. Now, I'm testing well over 400 trades over 13 years of data, and I see so many people that they'll make a little video and they'll show a strategy, they bring up a spreadsheet, and they'll manually look at the past 10, 20, maybe 50 trades sometimes, but it's just not enough. You need to be looking at the big picture. I know I've done it myself. Before I was using testing and trading software and able to program this sort of approach really easily, I was doing it myself, but it's just not quite thorough enough. Let's have a look at these results then. First of all, we'll look at the original strategy and we'll look at the performance report using the original time-based exits. So we can see we've got this time-based exit where we're exiting at the end of the session. And let's have a look at the performance report. Here's the equity curve, and it's quite reasonable, uptrending equity curve over those 13 years. Let's have a look at the total trade analysis. We've got 439 trades, an average trade of 8,200 yen. So let's now have a look at the strategy where we've introduced that reward to risk ratio style price target. In this next workspace, I've done an optimization of the different reward to risk ratios. So I've gone from 0, which actually shows the original strategy and includes the time-based exit like we've just seen, and then I've gone all the way to 5-to-1 reward to risk in increments of 0.2. So let's have a look at that report now. Here's the results of that report. You see this far column on the right hand side here, we've got 0, and then we've got 0.2, 0.4, so 1, that's using a 1-to-1 reward to risk, 2, etc. Now, so we can visualize these results a little bit better, I've put them in a bar graph, so that gives us a better idea. So let's have a look at that. And that's what the same results look like in a bar graph. We've got 2 bar graphs. The top one is on the x-axis, we can see that's our reward ratio, and on the y-axis we've got net profit. Same on the bottom one, but we're using the average trade value, and it's a very, very similar picture, isn't it? Whether it's the net profit or the average trade, it's actually extremely similar on this one. And remember, 0 is using that original time-based exit. So quite clearly we can see that the best for both net profit and average trade is using a 1.8 reward versus a 1 risk. That's our peak performer. Don't know whether it's necessarily the best or not. I don't like the fact that these 1.4 and 1.6 are particularly low. We can see a 1-to-1 that works both for net profit and average trade, and is actually slightly larger than using the original time-based exit. So we can safely say that using a 1-to-1 or a 1.8-to-1, we are actually going to get, on paper, better net profit and a better average trade. So let's go back to the chart and apply both the 1 and the 1.8 to the charts to see what happens. But essentially we can see that pretty much everything works. Below about 1, I don't think it's particularly good, not in terms of average trade or net profit, but anything from 1 through to 5 does actually work, which is quite nice because that might give us an indication that the strategy itself is quite robust. Just before we apply some of those values that we see in the bar chart, please do me a favour, and if you find this video useful, please give it a like now because it really helps the channel, and of course if you haven't already, please subscribe. So let's now apply the 1-to-1 reward to risk. Remember, as we can see here, in the average trade, we've got an average trade of 8,700, whereas the original was 8,200. Net profit, 3.6 million versus 3.7 million. So let's apply that 1-to-1. We've already seen the average trade number. Let's have a look at the equity curve. So straight away, we can see that this equity curve is definitely worse. We've got a strong early period, but then essentially we've got years worth of just flat results. And then actually since 2016 through to present 2021, it's actually been working quite well. So that's using a 1-to-1 reward to risk. Let's try that best input, which was the 1.8. And now we're looking at the equity curve using 1.8 reward to 1 risk. And again, quite similar to the 1-to-1. Pretty bad or pretty mediocre, just going sideways for quite a few years and recently picked up. Look at the total trade analysis, and we've got a bigger average trade. We've got an average trade of over 10,000 yen now. Slightly fewer trades, but we do have better peak numbers. For the last time, let's just quickly look at that equity curve and then now compare it to that original equity curve using the time-based exit. And you can see, okay, you could argue there was a small flat part of this, but overall I think the performance is more uniform throughout the years using that original exit. Well, what have we learned from doing those tests? In this case, with this strategy, we've learned that we can actually squeeze a little bit more net profit and a slightly better average trade, but it looks like it was at the expense of the consistency throughout the years. And personally, I won't be using a fixed reward to risk ratio profit target with this strategy, I will stick with the time-based exit. And that original time-based exit, if you think about it, was actually much more efficient because we were exiting at the end of the session. No trades run more than 24 hours, and yet we were using some of those higher reward to risk ratios. The trades were lasting much longer, but hardly getting any more profit whatsoever. So it just backs up that sometimes exiting at the end of the day does actually work really well. We've also learned that we must test everything, and don't just assume that 2 to 1 is best or 3 to 1 is best because so many people tell you that works. Find out for yourself by testing. And of course, every market and every strategy, every time frame, everything works differently. So there is no 2 to 1 works best. You know, when you're testing, you need to test each market, strategy, time frame individually because they all have slightly different optimal results. In my own trading strategies, I pretty much never use a fixed reward to risk ratio profit target. With algorithmic trading strategies like I use, I just find that they don't particularly work that well like you've seen with that strategy, and there are better exits to use, like at the end of the day, or reversals to take a trade in the opposite direction. I often get asked through comments and emails to make some small changes to strategies that I show and publish with you. So if there's anything that interests you and you'd like me to adjust on some of the strategies, then let me know, because they're always quite fun to make and sometimes they actually produce some surprisingly good results. And of course, I'll share them with you so that you can benefit from them too. Don't forget the link to the video showing that original kangaroo tail strategy, including the improvements. I'll leave that somewhere, definitely down below, and you can download the PDF instructions too. So until the next video, this is Jared Goodwin, and thank you.